She has also advised severally on optimal tax structures using tax-efficient holding companies and regional hubs, including tax-efficient finance structures across Africa. A series tax structuring and advisory experience spans multiple sectors, including oil and gas, power and utilities, manufacturing, and FMCGs. This has earned her a leadership role in PwC Africa as PwC Africa's family business leader. Please, once again, put your hands up and put your hands together for Esiri Agbeye. Another speaker and panelist with us today is Mr. Ajibola Olomola. Please put your hands together as she also comes onto the stage. Ajibola Olomola is a partner and head of Deal Advisory, M&A Tax, and Financial Services Unit of KPMG in Nigeria. In his time with KPMG, Ajibola has served as the lead engagement partner on numerous transactions, advisory engagement, including tax and regulatory advisory, mergers and acquisitions, transactions, M&A due diligence, tax planning and management, and financial model reviews. Ajibola obtained a Bachelor of Law from Obafemi Awolowo University, Ile-Ife, and graduated from the Nigerian Law School in 1989. He is a member of the International Bar Association and the Chartered Institute of Arbitrators in the United Kingdom. He is also a fellow of the Association of Chartered Certificate Accountants, ACCA, Chartered Institute of Taxation of Nigeria, CITN, and the Center for International Legal Studies, Austria. Prior to his time with KPMG, Ajibola served as the Senior Legal Counsel at Chief Rotimi Williams Chambers, where he handled lawsuits on diverse issues, including constitutional law, contract, and torts. Ajibola's experience as a lawyer, accountant, and tax and business consultant have enabled him to consistently deliver value to clients across various markets within Nigeria, Africa, and globally. He has also earned over 33 years of experience advising several local and multinational organizations on various assignments across various industries and sectors. I think you can all agree with me that our panelists are very seasoned and deserve another round of applause. And to be joining them and being the moderator and pilot of today's program, we have Detail's very own Anthony Eze-Amama. A round of applause to him as well as he comes and joins our panelists on the stage. Anthony Eze-Amama is an associate partner at Detail. He is the partner leading the firm's legal tax advisory practice and the team lead of the firm's energy, power, and infrastructure practice. Anthony possesses extensive knowledge of Nigeria's taxation legal regime, which he uses to ensure that the project structures and contracts are tax efficient. Anthony's extensive knowledge of tax planning and regulations enables him to guide clients through intricate tax planning, advising on matters such as corporate tax, international tax exposures in Nigeria. He has also handled various transactions ranging from mergers and acquisition, tax audits and investigation, and transfer pricing. He has a proven track record of securing favorable outcomes in tax matters and handling complex negotiations with tax authorities. Anthony is also a finance lawyer and regularly advises clients on capital raising transactions. His ability to understand and deal with complex finance structures, especially in the energy sector, enables him to provide pragmatic solutions and value-added service to clients. Recently, Anthony was also recognized as one of the 40 under 40 leading lawyers by the ESQ Nigerian Legal Awards 2022. Please, another round of applause to Anthony Eze-Amama. I thank our guests and I thank our speakers for taking time out today to join us today to discuss today's very important topic. And I know that it has been a very busy schedule for them individually, but nonetheless, they are here. So please, we thank you for making your time out to come here today. And before I go, I would like to call on Esiri Agbeye to take us through our presentation and also set the tone for today's discussion.
Good morning, everyone. Oh, wow, that's very loud. It's an honor to be here. Thank you so much for inviting me to be part of this session. Thank you so much to Anthony for chasing me very, very effectively. This is a topic that is close to my heart, more so because it shows that we are solving a problem in the country. And this is at the heart of what we do in PricewaterhouseCoopers, where I'm a partner. So I'll try to do this in the 20 minutes that I've been allocated. And I think following that, there would be a panel session. I'm hoping that those online can also hear me. Please just put a comment in the chat box so whoever can see those comments can, confirm. The topic for today is supposed to be on the Finance Act, really. But we're taking that into the full picture of fiscal policy for Nigeria, what the outlook looks like, and also what we should be doing differently. It also will be looking at administration. Why is this topic very important for us? We are at crossroads now in Nigeria where we are asking questions around how we would sustain the nation. So when the budget came out, we had the highest deficit ever of 10 trillion naira or more. So what that means is we're going to be spending more, 20 trillion naira, 21 trillion naira, than the revenue we will be making of 10 billion. If we were supposed to turn that around, we would have to increase our revenue by 106% to avoid any borrowing. Unfortunately, that is not the case. So we are leveraged very significantly as a nation, and most of what we earn goes into paying debt costs. Yeah. So we do need to turn things around. And only recently we heard that the subsidy was removed. That is taking a toll on our people. So you're seeing the roads empty. This all has to do with your fiscal policy. It's very important that we as a group here start to ask questions. It's not just for the tax practitioners. It goes down to the common man. And so we must try at every point in time to understand what the underlines are regarding the economy that we're faced with. So this gives an overview of where we're coming from the 1999 regime that was led by Olusegun Obasanjo. And you see very critically that our GDP growth was the highest during that period. A lot of people attribute that to the significant growth in the telecom sector that was introduced then. And then we had a significant step in the last regime that just went out with negatives in certain years. So the growth rate has not been fantastic, whereas population has grown at over 2%. So the good thing about Africa and Nigeria as well is we have great demographics, which developed economies are looking for. We have significant number of youth that can drive industrialization, that can drive digitization. But we are making the best use of them. One, that is my own solution. And two, if we really wanted to show that we were growing, ideally we should grow beyond the growth rate of our population. So whilst we're growing number-wise, in terms of the individuals that we cater to in this country, we're not growing the GDP accordingly. And a lot of that is related to the four things that I showed there. One is around the debt, which I spoke to. Most of our income goes into sorting out debt. More so, or what is worse, is that the debt is taken for recurrent expenditure more than capital expenditure. On taxes, we have seen some improvement, which is what I was trying to focus on in this presentation, with the Finance Act measures. Way before 2019, when the Finance Act started coming out, we had quite outdated tax laws, and that wasn't really good for business. So it had a very direct impact on our foreign direct investment, but also the foreign portfolio investment. We've seen some litigation come through, and that definitely is improving the tax base, but it can be better. The forex issue that we have running two parallel regimes wasn't really good for us as a country. In the early days of unifying that rate, we're seeing that there's a rebound on the cost of goods and services. But the good thing with that is also the positive it has for investors from outside. So before now, because we had those two rates running, for the first time that you dedicate funds to come into Nigeria and invest here, they're devalued. Whilst the government or the central bank or the banks will give you at a lower rate, the reality on ground is that you're incurring expenses at a higher local rate. And so it makes sense that you unify those rates. This is what the current government has done. But it will take some time. So short to mid-term, it might be tough, but in the long term, it's better that we're floating the rate now. Interest rates continue to be high. In fact, for some of the private sector players that we work with, there's always the question about where do I even invest my money? And some of those is looking at how do we diversify our investments beyond Nigeria. Should we only be investing in Naira? So it's important that we are also not only looking at fiscal policy, but looking at monetary policy, because this has a direct impact as well on inflation. And I think the last record was 22%. It's really high. This is what the budget looks like. Aggregate revenue, which I've spoken to before, 10 trillion naira. Expenditure is about 21 trillion. So we're currently at a deficit. I think there's an echo. I hope that will be sorted. What I've done here is to give an overview of the various finance acts that we've had coming from 2019 and what the objectives were. And it will be good to just give an honest assessment of whether or not we've achieved the objectives. I like the fact that our federal or colleague partners here from BPMG was the head of our finance act committees for many years. So I cannot say too much against what is there. But we will be honest, as I'm sure you will be as well, on what we can do differently. But we were also bent on raising revenue, so there were a number of amendments that came through that would have increased the tax take for the government. In 2020, we moved on to providing fiscal relief for taxpayers as an objective, funding the FG/19 response, trying to coordinate our fiscal management policies, and to reform extant fiscal policy. And we've done that successfully. We're still on the journey. In 2021, we duplicated some of these objectives, and in 2023, we're really looking at climate change or green growth as one of the significant add-ons. More so because Nigeria has determined that we're going to go green by 2060. That is an ambitious plan. We do have an ambitious energy transition plan as well. But to do that, a lot of countries are using a combination of fiscals and monetary. And for taxes specifically, they use a combination of penalties and incentives. The US came out with their own Inflation Reduction Act last year. And what was very informative is there's a very dedicated attention to attracting investments in areas that are considered renewable, so the renewable sector, the electric car, for instance. So massive investments or incentives are already accorded to those industries. Why? Because they want the investments to stay in the US. And this is pretty much what we should be overtaking if we want those investments here. Otherwise, we're competing for funds that will go still to developed economies. So we have a long way to go. So I'll just try and go through some of the changes that we had, bearing in mind the time that we have. Some of the changes that we had so far, notable changes. range from the taxation of gains on digital assets, so cryptocurrencies, although this is not something that has been legitimized or recognized by our CBN, but again, that is rising from those disposals will be taxable. It is taxable or was taxable even before the Finance Act amendment. It's just this brings more clarity to it. So we kind of capture that under tax equity reforms. There is a rollover relief that has been introduced on the disposal of shares. So last year, we had that shares were now going to be taxed. Before now, we did not tax the disposal of shares. And that was supposed to encourage foreign portfolio investment. But over time, we've seen that we probably are not making or getting so much benefit in that sense with the exemption. And we need to start gradually unifying the capital gains tax rate with the income tax rate. Where we fail to do this, it gives an opportunity for an arbitrage, which can always be a planning opportunity for any taxpayer. So for instance, I would rather have capital gains on an investment than have income on that investment. So I structure it in such a way that all of my returns come at an exit date as opposed to during the operations of that investment, which is maybe through dividend, because with a dividend, I'd have to go through an entity level tax, currently at 32% or probably higher if I was in the oil and gas sector. And then there is another layer of withholding tax. So give or take, I don't get so much when I wait where I claw back my returns during the operations of the entity. Whereas if I waited upon exit, it's a fantastic way to make a significant gain and not pay a capital gains tax. So fantastic planning opportunity for a lot of private equity funds. And what most jurisdictions will do is to align the two rates so you don't have that arbitrage. And that's where we're headed currently. We've also now introduced the deductibility of losses under this Finance Act so that going forward, if there was a loss, you can actually offset it against the gain. We didn't have that before. In fact, I think the next step we need to start thinking about is indexation, because when you dispose, like in Nigeria, where we have weak currencies, where you dispose of in Naira, what you probably invested in at a lower exchange rate maybe has accumulated gains because of the foreign exchange. So there's a huge gain, perceived gain, but it's not really a gain per se. So these are some of the things that we probably need to think of going forward. The rollover relief was also introduced for about 5 years. The other changes we have were around reforming our incentives. So a number of incentives which we considered were now redundant needed to be revisited or relooked. One of the investments or incentives that was withdrawn was the reconstruction and rural investment allowances. So the reconstruction is the more popular one, where you get 10% off of your plant and machinery. And because we don't have a definition of plant or machinery in our act, very easily we could put a lot of assets into plants and just keep claiming a 10% investment allowance. And in fact, some of the case law that we've seen in the UK, where they would say a horse is a plant, or the window in the building is also a plant because of the aesthetics it gives to the church. Those kind of ideas then informed this move to remove it, because people were also claiming on things like furniture, you know, buildings, if it qualified as a plant, because they would feel, oh, this building is adding so much value and functionality to the business, it qualifies as a plant. And the intent had far changed, the intent for which this was introduced, so that we would industrialize. We had far gone beyond that. So it was important to take that out. The rural investment allowances as well was applicable to companies that were investing in rural areas where there was no telephone, no roads and all that. But now we have a road infrastructure tax credit scheme, which I think suffices to a very large extent. So it would have been quite a duplication where we retained this. So all of these provisions were really to start to consolidate on incentives that had been given in the past, relook whether they had made any major impact in our economy, and take those that were not contributing positively to the economy. The one thing that we also took out was the tax exemption for foreign currency earned by hotels. So again, that section was kind of, it was strange. So if you went into a hotel and then you paid perhaps in local foreign currency, you would categorize that as exempt. But I don't think the intent was that those who walked in, to the hotel and spent a few days while in Nigeria, that income will be foreign income for the hotel. So some of that currency income that was derived was exempt. I think what it was intended for was to attract tourism, but we're seeing that tourism isn't really picking up as we would like it. There are a lot of other things that it depends on. So this was a very loose incentive that was sitting there. The other thing that we looked at was administrative operations, and some of the things that we proposed or have seen go through that Finance Act is the replacing of the section on unrestricted capital allowances deductible for upstream and midstream operations. So this has been introduced and this is welcome. The other thing that we see is for shipping and airline businesses, they would have to file tax returns now with certified statements of their gross revenue. I don't know if we've all been following the news, but the shipping guys have been in the news of late. Some of us may have been involved in also resolving those issues. We have a section in our Companies Income Tax Act, Section 14, that requires that they pay taxes if you're in the business of shipping transportation. And then there was an amendment, I think last year, to exclude certain income referred to as leasing income and all others that did not fall in the freight category. So any non-freight income. Over the years, the tax authorities had not paid attention to this, or sometimes they would, and then it dies down. But this was the year where we had the biggest attention being paid and assessments that ruffled the industry, where they are now at the table sitting to say, how should we go about this going forward? Otherwise, the assessments are significant going into years as far back as 2010. But this introduced administrative provisions for the filing of those returns. And this was the one no one really liked, where we increased the tertiary education tax rate from 2.5% to 3%. One of the reasons why this stands out as odd for me is we've had this act for quite some time now, but we don't have that the universities or tertiary education is ranking the highest globally. We've consistently fallen. So before now, we would hear universities like University of Ibadan, Ife, First, each one was claiming, what, I'm the greatest of the greatest or whatever. But that has since gone by. And a lot of us are now even looking to the private sector for tertiary education. Whereas we keep funding this and it's increased now to 3%. So I think this is one of the things that we probably should deliberate about on the panel. Otherwise, we wouldn't be doing justice here. What's also important to note is the timelines for which these amendments will come through. And I think one of the case law that we've had over last year was regarding AccuGas at the Federal High Court that talked about tax amendments such as this being prospective rather than retrospective. So for all these changes, timing is very important. One has to look at the date when it comes into effect and when it will become applicable. We've had Section 7 of the Act amended to empower the FRS to assess transactions to determine their credibility. This is mostly around fictitious arrangements. We also had the removal of imposition of VAT at the point of clearance on imported goods purchased via electronic means. I think the more important one is item 4 below, which I'd like to spend some time on, where the definition of the term building for the purpose of the act was amended. Before now, we used to have buildings would also include towers. So those towers that you see that help to make sure that your calls return to you without any hitches. Those towers qualified as buildings and were therefore VAT exempt. Unfortunately, some of the players in the sector were not aware and had charged VAT and now are seeking to also get refunds. But in the process of getting the refunds, it now dawned on the FRS that, wow, we'll be giving out so much. We might as well just amend that section and take out towers. So towers have been taken out from the definition of building, and so they would now have to start charging VAT on the rentals or the colocation services on those towers. Now one might ask, how does this align with our big ambitions of saying that we want to increase internet or broadband penetration, we want to become a digitized economy? You know, it's a good question to ask, which is where we probably need to start looking at the objectives again of the Finance Act. We also had introductions of levies like this, import duties on goods that were imported from outside Nigeria. We had excise duties on all services. This was quite dramatic because at some point the Minister of Telecommunications, Patami, had come out to say, no, it should be withdrawn. And he single-handedly ensured that that excise duty was withdrawn, I think some 2 years ago. But it's come back again, you know, and again, the question around whether this is the right time for this has come up. So we've had other changes, such as those to the Petroleum Profits Tax Act, where we've increased penalties from, say, 10,000 to 10 million naira a day, similar to what we have with transfer pricing. So it's wrong. It's, in fact, not business-wise to miss any of your deadlines on that, the Petroleum Profits Tax Act. And with the Petroleum Profits Act, you have filings on a monthly basis, then you have to do a catch-up filing 5 months after year end. Where you fail to then do the filings, those penalties count on a daily basis. There's a revenue distribution formula now for the electronic money transfer levy, as you'd see there. And then we also have a reintroduction of tax deduction for payments made under a deferred annuity contract. And these are some of the other changes that we've seen. Amendments of Corrupt Practices Act, all of this really targeted at administration. Some of it also targeted at facilitation fees that are gotten during the process of procurement. And also the amendment of the Ministry of Finance Incorporated Act to establish a governing council. To address some of the issues that I spoke of, we all know that there was an executive order, some of us may not know, 4 executive orders that the president signed very recently to pretty much suspend the operation of the Finance Act because of its non-alignment with the tax policy of 2017. We also had that some of the excise duties were suspended, like the one on telecommunication services. The green tax, the excise tax on single-use plastics also suspended. And the import tax adjustment levy on certain levels, certain vehicles also suspended. Why was this the case? When we look at single-use plastics as an example, whilst we recognize that Nigeria is at the bottom when it comes to managing our plastics. In fact, we're the highest in terms of plastic pollution, 7th highest in the world. It was important that we introduced penalties to withdraw the plastics. But what we also know is that plastics also contributes to the economy that we're operating on. And for us to actively withdraw, we must do it in a just way, so just transition. How can we take that out without resulting in job losses? So there had to be further consultation with stakeholders in that industry to then say, what's the best way for introducing this? How can we also align that with the extended producer responsibility schemes that some of these plastic producers were already doing? So what some of them are doing is they have extended responsibility programs that will ensure that whatever plastics they produce are collected and recycled. And so there is intentional effort to actually change the type of plastics that we have. However, all plastics are recyclable, so there's no excuse. But then it's the usage, how we pick, how we dispose, that's the problem. Almost 50% of what we use in the country ends up in dump sites. The only 50% that is transported, 10% of it is the only one that is recycled. The remaining 40% is just floating somewhere in the air or in the seas. And these have health impacts, negative health impacts. So it was important that we did this, but then not without consulting the sector to say what other measures should we be adding on in addition to the taxes that we're levying. So most of these have been suspended to give the government time to sit down with the stakeholders, to align the Finance Act with our tax policy that requires a minimum of 90 days engagement with the stakeholders, and then produce robust Finance Act regimes. And this is what we see in other jurisdictions. You can even have a year or 2 years of transition. The draft is also made available to the public so that they can also review actively and feedback recommendations. Because at the end of the day, those of us that were privileged to be in that room are not the brightest. There are other people too that are intelligent. So we must definitely pay homage to the entirety of our economy. In terms of the future outlook and what can be better, I think one of them is definitely the stakeholder engagement. And we're hoping that, we will have more of this as we go along. Just to say that this was a start, and we've only started to put some sense into what we previously did not have before. And so we've come a long way, but we can definitely do better. We've had the Startup Act, we've had fiscal policy measures, we've had Business Facilitation Act, we've had also decided tax cases. In fact, that Business Facilitation Act amended quite a number of employment tax contributions, like your NHF, your ITF. The employers that are now supposed to deduct have changed, and it's now almost, it's not compulsory anymore under the Business Facilitation Act. So that act sought to amend quite a number of acts that affected businesses doing business in Nigeria, so we could increase the ease of doing business. We're definitely looking more towards major tax reform, and now we have a fiscal policy and tax reform committee that has the objective to reform the tax laws. The expectation is that we would deal steadily with multiple taxation, which has always been a key problem with our country. We have I think it was 2 days ago, the SA on Revenue announced that the 52 taxes of the federal government are now looking to be streamlined to about 10. And some of the agencies that are focused on collecting revenues that are not taxes, we will look at shifting those revenue collection contributions to organizations that will collect them so that they can focus on the intent for which they were set up. For instance, the TET fund. Why are they not focused on improving tertiary education? Why is the focus just on collecting the taxes? At the end of the day, once they collect the taxes, that's where the bus stops, and we need to now start shifting them back to the original objective. There's opportunity for tax advocacy, definitely. VAT on diesel was a very big one that happened. In fact, the VAT had been introduced prior, I think some 2 years now, because in the Act, the Finance Act at the time, they had amended the list of items that would attract VAT and not specifically mentioned AGO. But there was another term used like crude petroleum oils, which we thought could be a generic word to cover the diesel. But regardless, we've had the FRS come with huge assessments to say we want to collect VAT on diesel. That is not in alignment with our monetary policy, which is looking to reduce inflation. Because what that effectively does, it increases the price of diesel. A lot of our industries rely on diesel for the products that we all buy, and that increases the cost or your inflation. And so what we're saying is this isn't the right time, especially now that we've just removed the subsidy from PMS. This is a time for us to build, again, before we start to level the playing field with the VAT introduction. There's definitely an aggressive drive for revenue. Like we said, the state of the nation is negative, and the only way we can repair that is through revenue. So we would be seeing a lot more in terms of increased focus on revenue and administration, and of course, the capabilities of our tax authorities so that they are up to the task in collecting those revenues and also playing in the field of dispute resolution, adjudication, which is definitely going to arise as we have different interpretations in the laws. So thank you very much. I hope I stayed with the time for 20 minutes. Happy to take more questions.
Please, can we give another round of applause to her for that beautiful presentation? She has more than set the tone for today's discussion, and we'd just like to give the panelists a few minutes to gather their thoughts, as I'm sure that there are a lot of comments and questions that they would like to discuss arising from the beautiful presentation. Thank you.
Thank you, Esiri, once again for that beautiful presentation. And my first question will go to Mr. Olomola. And I will start by saying you have been a key player in the introduction of Finance Act since 2019 in Nigeria. And I know you have so much to say. I'll just start by asking you, do you have any comments in relation to the presentation Esiri just gave?
Thank you very much, Anthony, and many thanks to Detail Commercial Sisters for inviting me to this seminar on a very important topic, one that affects every single one of us Nigerians. And thanks to Esiri for making such a comprehensive presentation that covers the field. I'm not the only one that's privy to the Finance Act, the introduction of the Finance Act. Esiri has also always had a seat in the room. We've worked at this together, along with several other public-spirited Nigerians and notable Nigerians from the private sector, where Esiri and I play. Other participants from the private sector were there, as well as several government representation, including from the fiscal regulators, the Ministry of Finance. Of course, the committee itself was set up by the Minister for Finance, and also, of course, the FRS, who played a very active role, also as Esiri described in the course of our presentation. So it's been a robust engagement that comprised many participants, and that's probably the first takeoff from Esiri's presentation, because when the President, in his judgment, decided a few weeks ago to suspend the implementation of the Finance Act, there was some public commentary as to whether there had been adequate consultation leading up to the introduction of that legislation. And of course, it bears repeating that there was wide consultation. Even in the framing of the legislation, the private sector were in the room. People like Esiri and I, speaking for the private sector, were in the room. And there were many seminars and webinars that were held. I had the privilege of speaking at a few of them, where comments were solicited from the tax-paying public and the organized private sector, Manufacturing Association of Nigeria. So special sessions were created where the public was sensitized as to the direction of travel of government thinking around financing of the public revenue. So it's not quite correct to say there was no consultation, which the president, or at least some of his handlers, have alluded to. But it's also important to give credit to the fact that the government wants to, again, give people a chance to express views on what they want to do. And so one must commend the government. The more consultation there is, the better for all of us. And then we can all collectively as Nigerians rally around the objectives of the bill. In rounding up this comment, I will just make a point. There's this constant reference to the national tax policy as an overarching framework against which tax legislation should be measured. And I think we need to be careful. I speak in the midst of lawyers, and so these are matters that you would have to evaluate, particularly for your clients. Can a policy, even if it's christened national, can it provide an overarching framework for the passage of legislation? I would have thought that the answer to that would be no. The national tax policy is an instrument of the executive branch. It's not binding on the legislature. Legislature can go in any direction they want to go. In fact, no legislation is binding on the legislature. I mean, one of the things taught us in constitutional law is that there is no law that the parliament can pass that can bind or prevent a successor parliament from going in any other direction they please. So we need to be careful. We need to be careful not to apply or interpret the policy document, which should guide everyone, in a manner where it's being used to oppose legislation. If you situate the policy against the legislation will supersede. So you can't suspend a legislation because it doesn't comply with the policy. There's something wrong with that. So that has got to be addressed. And also, let's bear in mind that that policy also doesn't apply to states. So the only party that is bound or, regulated by an executive policy is the executive branch. It should guide the way they behave, but it's not binding on anybody else. Thank you very much.
Thank you so much for that question, because that was what I wanted to ask. One of the questions I wanted to ask you around that executive order and what your general comments are about it. People are saying, questioning the legality, and on the other hand, people are saying, is this something, let's forget about the legality issue here and focus on the imports, whether it carries things that will make the economy function better. I don't know whether you have further thoughts on that, coming from the impact of that executive order on the economy.
I think the impact is positive, and I would like to also love to hear Siri's views on that later on. But the impact is positive because at the time the Finance Act was in draft, there was not, some of the economic headwinds we faced in recent times simply went there. So we hadn't seen a withdrawal of petroleum subsidies. We hadn't seen the moderation of the exchange and the fact that we now have a floating rate. And that has introduced, very significant degree of inflation into the economy. So everybody is suffering the pinch right now. And if there was a framework that allows us to take a step back and look at what we're doing as a country. So you had President Buhari, who had been going through all these climate change accords and making commitments on behalf of Nigeria towards net zero emissions, which means that we want to eliminate emissions. Now, everybody would agree with you that those are extremely laudable objectives. And then we had introduced some provision, Nigeria had introduced some provision through the Finance Act towards meeting those COP objectives. But we also heard President Tinubu talking about the fact that as one of the palliatives towards the poor, we're going to start switching our automobiles from petrol consumption into, compressed natural gas. Now, that's again another way of meeting our COP objectives, but that's not in the Finance Act. So you find that things have happened in between when the Finance Act was first promulgated as a bill in December of 2022. That's when it went to the president for assent. And today, July 2023, when we now have another opportunity to look at those COP obligations. So maybe instead of going towards plastics, maybe a faster way of doing it was CNG transition. So those kind of things. So consultation is good. More consultation is good. And then moderating the economy using legislation like the Finance Act. So that you're not, I give an illustration. You have the CAMA, the Companies and Allied Matters Act, that was introduced in 1990. And the first major amendment to it was what we saw in 2020, when the CAMA was then amended in 2020. It's taken us 30 years to amend the legislation. You had CITA, the Companies Income Tax Act, that was introduced in 1990. And then we haven't had a major overhaul since then. VAT Act was 1993. Now we have problems with VAT. Now, you can't wait 30 years, 40 years. You have Stamp Duties Act, which is a 1958 legislation. And we're still collecting stamp duties based on the 1958 law. So you can't wait 50, 60 years to amend laws. Now, tinkering with it on an annual basis, biannual basis, allows you to be sensitive to what's going on in your economy. And I hope that this government will continue in that tradition. Most developed countries in the world do so. In the UK, you have a finance legislation every year. Ghana next door to us. I mean, it is the normal practice. So I hope and I encourage the fiscal planners to continue with the tradition. Thank you very much.
Thank you. Thank you. I would like to hear a serious response or comments to that initial question, which is, what is your take on this executive order? Is it a good instrument? Is it something? What's your general take on it?
So I also definitely agree that it's very positive. And just leading to what he shared, having the Finance Act every year gives us the opportunity to align our laws with the economic realities. Where we don't, then we have that gap created where we're not listening to people. I think the very important thing is the opportunity for more stakeholders to be part of this discussion. Because much as we would have tried within the ambits that we had to engage stakeholders, I think it could have been better. Some of the discussions which are more tuned towards business needs could have been better reflected as well. So for instance, we came up with there was the introduction of the green tax. And now we're seeing things around moving to gas. And the question then is, in terms of greening, what should really have been top priority for us? Is it the consumption of fossil fuels, or it's the usage of plastics? And there's a lot of other things as well that could give us some ticks when it comes to greening. When it comes to plastics specifically, like I'd mentioned before, there is already an extended producer responsibility framework that requires certain actions from manufacturers. Where we dispel or do not consider those investments that are already made in that area and just come with a tax, it's quite discouraging. So the opportunity to hear from that side and then balance it is important for every finance act that we come out with. Would we have time, given the fact that we have a very timed period for a year, to do such extensive stakeholder engagement? Probably not. But we probably need more forums, more awareness, a face time to say, when we come out with a draft bill, people can then comment on it. Other economies that have transition periods of 1 to 2 years, in the period of the 1 to 2 years, they already have shored up revenues that are sustaining the economy. Not so for Nigeria. We're at critical times. So we're not looking at the luxury of 1 to 2 years for doing that. Perhaps in the future, we can have more extensive time for that. But what I would also like to add is on the tax policy per se, I think the spirit behind the laws that we come up with needed to be guided by something. The tax laws or the tax policy does not override a legislation. The powers on which the government came out with the executive orders were enshrined in the Finance Act that allows him to tinker with the commencement dates of the act. And then the reason behind that was to give further stakeholder engagement before introducing the commencement date. But the idea behind the tax policy is positive. I think what we need to do is, how do we enshrine that in our laws as well, so that we don't have these issues of, can the tax policy override? I think the spirit in taxation, we know the canons of taxation. There's equity, there's certainty, there's fairness. All these are things we learned in books. But we apply them when we're coming up with laws. The same thing for economics. Where you have a deficit, what are the kind of measures that you put in place? Where there is inflation, how do you deal with your interest rates? Those are not laws per se. They are the backbone for the knowledge that we apply in the instruments that we come up with. So I think that's the idea behind the tax policy, and really what we should be doing now, because there is a tax committee, is to ask ourselves, how can we also enshrine that in the law so we don't have the question of whether there is a gap or no gap in our laws.
For that, I think one takeaway from me from hearing both of you speak is stakeholders' engagement is very, very critical. Always consult before issue these instruments because of the impacts they have on the economy generally. That's something I will recommend for the important stakeholders that have one role or the other to take in ensuring that we'll have very good finance laws or tax laws going forward. And picking up from that, I have a question for you, Esiri. We have been enacting Finance Act since 2019. What do you think are the issues that are yet to be addressed in our Finance Act you would like to see addressed in the coming one?
One of the big issues is with the very many acts that we have to deal with and taxes that we have to deal with across different tiers of government. Unfortunately, we don't have the backbone for not doing it at those different tiers of government because we have a constitution that gives powers to all of these tiers of government. I think it's important that we look into how we can accommodate a more centralized approach so that we don't have haphazard taxes. The other thing that I think we need to look at is in terms of the age of those acts. They're very outdated and do not necessarily align with business realities. I mean, Jibiro just talked about the Stamp Duties Act, which is as old as the 50s. Some of the levies were 10 kobo or 20 kobo, and it's per document, right? That is administratively burdensome to think through every single contract that you sign and see whether or not a stamp duty is required. So there are big ticket items I think we can consolidate efforts on. And some of them definitely would be income taxes as an example, but also on consumption. So that if we had those two broad levels, then we can start to think about how we consolidate taxes, one, and then how we also administer across the different agencies. So I think in the last Finance Act, we made it very clear that the Federal Inland Revenue Service, for instance, was going to be a collecting agent for some of these taxes and gave them bold powers to just collect the taxes over and above other agencies that would seek to collect those monies and also raise audits or assessments in the period. That was definitely drawing down on the time that clients could afford or companies could afford for their business. And that also has a direct impact on our GDP growth. So I think it's important now to start to consolidate on some of the key wins that we had in those previous Finance Acts and make it very clear, having looked at the entire tax framework, including other tiers of government that have not been actively involved in this. So states, for instance, the Personal Income Tax Act has not seen the kind of amendments that I would love to see. We don't have a definition of who is resident in this country. We do have that taxes should be collected based on residents per state. But when you look at whether or not the individual is resident here and should pay taxes even if he has traveled out of the country, we don't have that kind of definition. So someone might take off or get off a job for, say, a 30-day period or 60-day period like we had during SARS and sit outside and then just have a termination contract. and that person is no longer taxed, even though they have their proximity to this economy because they continue to maintain bank accounts here, their houses here. So the economic nexus is here. Countries that are more developed tax their citizens in that manner once there is that nexus. And we lose out already from those individuals. When we say that our tax revenue is not as high as it should be, it's not as high as it should be because we have a largely informal sector that we're not taxing. So all the attention is mostly on the corporate side, the companies who are in the formal sector. In trying to expand our lens to that informal sector, it must by all means include individuals, it must include unincorporated entities, it must include all those companies flying under the radar to widen the tax net. So in trying to upgrade our administration, we must also look at the enabling laws for taxing some of these guys. Harmonize some of the taxes, but also make a central point of collection for doing that across board. And I think one of the things that we probably have missed is in defining who is resident in country so that we can start to collect taxes as well from some of these individuals who also, by the way, make more money because of the tax planning opportunities that they are afforded. So the income tax rate for individuals is what? 24% max. When you take out the allowances, it's 20%. When you look at corporates, they're taxed at 30%. If I'm a business owner, I would divert more of my income to my hands as an individual. So that income is taxed at a lower rate. I put myself on a salary. But in other jurisdictions, that arbitrage is closed. So we're crying, oh, there's no tax revenue, there's no tax revenue. But the only thing that we're doing is we have knee-jerk reactions that just continue to tax the compliant few. Whereas there's a whole world out there that we can actually bring in. So that's what I'd be looking to in subsequent finance acts.
Beautiful, beautiful. I think what you just said is an issue I have encountered in many transactions. Residency. In fact, I recall looking at one case then to find an answer to that, echo drill or something like that, but that keeps coming up in multiple transactions. My question is to Olomola. A Siri pointed consolidation, the need for consolidation of taxes. And recently I read something in the news where we are being told that the federal government is looking at possibility of streamlining the taxes payable at the center federal level to max 10. How do you think this can be implemented in reality? Because we know that other than the formal taxes set out in the laws, we have the informal taxes. So you set up shop here tomorrow. Before you know it, you have a million people chasing you. How do we consolidate these taxes to help our businesses to thrive?
Thank you very much. It's a very good question you've asked, and it's one that allows me to also, in a sense, expand on some of the threads that a Siri had identified, which I was going to comment on or ask for permission to comment on. There's a lot going on in this economy, and the reality is that we all need to come into the party, right? Businesses have to be willing. If you go back to Thomas Hobbes and the social contract. So we all have to play our role in financing this federation. If you want good roads, you have to contribute to it. And your contribution is your taxes. So I think businesses must be willing to pay tax. However, when you are technically overtaxed, then there's a disincentive for you to stay in business. I'll give an illustration. When we worked to provide the views of the private sector, and S3 was part of that conversation as well, to the fiscal authorities back in the day, we explained to them, take this double tax on profits, on retained earnings, which had been litigated in the Oando case. Two of the Oando cases had gone up to the Court of Appeal. I think one is probably waiting at the Supreme Court now on the question of taxation of retained earnings. Retained earnings are earnings after tax. So when you then declare dividends from your retained earnings, the FRS comes to you and says, oh, give me 30% of that. Well, I already paid 30% when I made the profit, right? So the effective implication was that I was paying, it wasn't 60, it was about, we did a rough calculation, it came to about 45 to 50% tax
59%.
on profits. I mean, why would any reasonable person what margins can you possibly be earning on which you can afford a 55% tax on your profits? That's a disincentive to mobilizing capital. So first thing is, let's paint a picture of what we want to do in this economy. Now, the World Bank recommends that we should be earning about 18 to 20% of our GDP, and probably a point of departure from a series of very good comments. I agree with everything she said, but I'll make a little departure. We should grow our economy. We should grow our GDP, because when we grow our GDP, we earn more taxes. But even as of today, I was doing a calculation while you were making your presentation, and the GDP numbers for Nigeria in 2022 was 477 billion. Ignoring the decimals, there's a 0.39 there. If I just ignore that, 477 billion US dollars. If I take the World Bank recommendation at 20%, should be the accretion to the fiscal authorities, you're looking at $95 billion. And if you convert that to Naira at 703, that takes you to 67 trillion Naira. What Nigeria should be generating as fiscal revenue is 67 trillion Naira. What we are budgeting to generate is 10 to 12. You can see that delta. So if you were to close the gaps in the economy today, Nigeria, without growing the economy, we can be generating 70 trillion Naira. Imagine if we grow the economy on top of that. We can get to 100, 120, 150 trillion Naira. Look, at 70 trillion Naira, would we be complaining about a debt overhang? Would we be unable to finance public expenditure, public infrastructure? All these problems, it's a scramble for the bottom. We're bottom feeding like vultures. Would we be having a problem with petrol subsidies if we had 70 trillion Naira? Answer is no. So the economic implication of us as Nigerians not doing the right thing as per Nigeria, not discharging our fundamental duty to Nigeria to contribute a little out of your profits. 30% if you're a corporate, 20% if you're an individual. And you can do a random check in this hall and on the audience. How many people here have filed their tax returns for the year? How many? When you go to your church on Sunday, do that random test. Let the pastor ask his congregation, how many people here have paid taxes for this year? We all don't do it. And then we expect some Father Christmas somewhere to come fix our roads. Now, Lagos State blazed the trail back in the day. They got religious leaders to come on TV, Adeboye, the Muslims, just to encourage people to pay taxes. And that leads me to your question on consolidation. In the days of the military, we had the Taxes and Levies Collection Decree, which became an act after we became a civilian government. And that decree essentially listed out the taxes that could be collected at the federal level, the state level, and the local government level. And it was it prohibited taxes outside of that list. That matter, that decree, which became a legislation, was then subjected to judicial test in the Goodluck Jonathan administration, and the court struck it down on the grounds that it was unconstitutional. So that tells me that as a lawyer, maybe the answer is in the Constitution. We need to insert, so if the law was struck down for not being constitutional, then let's correct it in the Constitution itself. Hotwire it into the Constitution. What the federal can collect, what the states can collect, what the local governments can collect. That way, nobody can say they don't know what their powers are. Because if you require manufacturing companies to pay 50 different taxes. They're going to spend nobody goes into the business to pay tax, right? You go into business because you want to make money. You want to trade, you want to buy and sell, you want to provide services. That's why you're in business. But now you have to set up this superstructure that enables you to track and pay your taxes. It's too much of a burden. Like Esiri also correctly pointed out. We need to reduce the burden on businesses. Let businesses focus on what they do best, employing people and continuing this wheel of our GDP. And then collect as simply as possible the taxes due to everyone. So my answer to you is that I will suggest that it should become a constitutional matter, a schedule to the Constitution or something that makes it impossible for anyone to go outside of it. And I think you must commend, I think it was the special advisor on revenue matters, Mr. Adedeji, that actually made that comment that we will try to shrink the taxes from 50 to 12, 10 to 12. Honestly, each time that guy talks, I keep thinking, oh my God, oh my God. I mean, I have several oh my God moments when he's talking. I hope he does it. I hope this government of President Bola Ahmed Tinubu and his economic advisors, I wish them the very best. I hope they achieve this. If they do, they would have taken a significant burden off the productive factors of this country. And you will see the impact immediately. Transparency, simplicity, ease of administration, the list goes on. And then, to make matters even better, government now has a full-time chairman of the Fiscal Policy and Tax Reforms Committee, a series former boss, who is now, he's been talking tax for maybe since the Stone Age. So, if anybody understands it, that's the guy for you. And just like that, he's now available to the government of the Federation. So what do we expect? I have a long laundry list for Mr. Oyedele. And,
we also do.
And quite honestly, if we don't get it right now, I don't know when. That's a guy who can tell you about the national tax policy. If you wake him up at 2 a.m., he can tell you where the gaps are, what the problems are, and what do we need to see. We need to see a consolidation. If you look at the telecoms companies, I think they have about 75 different taxes that they are paying. If you look at that sector, what are their margins? So that's the answer to your question. I think, and I will suggest to Mr. Oyedele and to Mr. Adedeji, and also to the President, we've got to make this a constitutional matter so that it is binding on everyone and it is clear to all, And one last comment to the legal profession, because it was lawyers who took the matter to court and had it struck down. For those of us who practice tax, once it's in the law, we are ready to comply. We don't think so much about challenging. We think more about, look, let's just follow the path of least resistance, comply. But the lawyers came to the party and made things untenable for everyone. And once that case was won, I am not criticizing the judgment. I'm sure it was the correct judgment. But judges too sometimes have to look at the impact of their decision on the larger society. So why would the judges strike down a law that brings order? Did the judge prefer chaos? Did the judge prefer that things should be, confusing? You have a legislation that provides order, that provides guidance to everybody, and a judge strikes it down? Why on earth would he do that? Okay, after he struck it down, what has the government done? So lawyers also have a role to play. We see lawyers as ministers in the temple of justice. But we are seeing more and more lawyers behaving like agents of anarchy. There are some cases you must turn down. It's not everything you must take to court. You can advise government and say, hey, guys, for example, my comment on the executive orders. I will not say that because I have reservations about national tax policy, we will not obey executive order. Executive order has brought clarity to the business community. We're all very happy about the executive orders. But then privately, you can tell the government, next time, don't do it this way or don't do it that way. And I hope the legal profession can borrow a leaf from that. Thank you.
Beautiful, beautiful. You said, I think I will come back to you later on the telecommunication. Some of the points you raised there on the taxation. I will go to a Siri. But before I go to a Siri, I think one problem I saw with that law you mentioned, which is the Taxes and Levies Approvals of Collection Act, which the judge should have perhaps resolved that issue in a more ingenious way, was that the law started with notwithstanding the provisions of the Constitution, which then more like brought a clash, that the law was trying to, between the Constitution and a National Assembly law, which one should prevail. I believe that was the basis the judge got the weapon to strike it down. Okay, you want to comment?
Permit me, Anthony, because it's a matter I believe strongly in. If you look, I mean, the law was passed by military decree. At the time that law was passed, the legislation could have the words, notwithstanding anything contained in the Constitution, because there was a Supremacy Act. Under the Constitution of 1999, the president had the duty to amend every decree that had been grandfathered and make consequential amendments to bring it in line with the Constitution. Now, of course, it's not the job of the judge to do that. That was the job of the Minister for Justice, the Attorney General. But the point being, the judge didn't need to read the legislation as contradicting the Constitution. It was valid when passed. So he should have interpreted it in a way to save it. With all due respect, I'm not knocking the judge. But there were other paths available. Because the consequence of that judgment has been confusion in the national economy. Thank you.
Thank you. So I'll go to a Siri. And my question is around the education tax. You spoke about it when you made your presentation, and I want to follow up with you on that. Education tax as of 2019 was 2%, if I'm not mistaken. It moved 2.5%, and now 3%. My first question is, how does this impact on the sectors with small margin, profit margin? When you are now increasing their tax burden, in addition with the corporate tax, which is 30% depending on where you come under. The second question is, indeed, what does that 3% represent in terms of amount the government is generating? And will that amount be able to bring about industrial peace in our universities? Would that bring about infrastructure? Would that bring about the much needed growth we need to see starting from that? Because if you fix our universities to a great extent, I think you fix the economy.
I don't know the numbers and the extent to which they have been applied to date, but I do know that there are very evident signs that we're only getting worse and not getting better. So there's no assurance that an increase will repair what it was that that fund was set up for in the first instance. It's definitely high time to critically look at that. And when you talk about companies with small margins, the tax is actually tax on profits. So it should correlate with the margins you earn. The only problem we have is that we have some add backs, that then increase your profit. So if you had a loss and you could have gotten away without paying a tax because you made a loss, an accounting loss in the year, because of those adjustments, you could actually get to an accessible profit and then have to pay taxes. So perhaps maybe what we need to look at is the baseline on which those taxes are paid, and then ask ourselves, should we be changing that? When we also look at consolidating the taxes perhaps at the federal level, the answer we might come to is that companies actually pay a lot more than the 32% or 33%. And so the question then is, should we be removing certain taxes? Should we limit it to certain taxes? And then should we divert more attention to consumption? Because I honestly feel that there is a lot less burden placed on the taxing authorities where we take taxes at source, perhaps at the point of importation through our excise or custom duties and VAT, as opposed to profit taxes. So to me, my honest opinion is education tax has not done anything for us. We used to be ranking at the top with some of our universities at the time this act was enacted, but we've gradually just lost that position now, and we're only sending our schools to private schools here. But again, even our government officials and some of us even sitting in the room are having to deal with foreign universities. Why? Because it's a global landscape now. Nobody's going to make an excuse for you coming from Nigeria and then you have deteriorating education infrastructure. You're going to have to compete at the same level with your global counterparts, which is why a lot of us are sending our kids outside the country to get the best of education. So no, the education tax hasn't done anything for us. Increasing it is not going to do anything more. And of course, it calls to question the tax apathy that we're suffering now. We will continue to have that if we're not reaping dividends from the taxes that we contribute. So we have a long way to go. But I would say for now, we need to merge those taxes and have a realistic check on what companies should be contributing. The other thing I wanted to quickly touch on was the telecom sector that you spoke about. And I'm very particular about that because I think it's a way to our growth. It's a key to to the future. What we're suffering now, NCC had released a publication about 40-something taxes that the telco sector suffers. Not only do they suffer it at the federal level, but they also suffer at the local government level. So there's a lot of taxes they suffer paying to transport stuff, and even on the towers themselves, they have to pay taxes to either the state and the local government. What is more frightening is the tax that they pay on their profits is way lower than the withholding tax they suffer at source. So currently, as we sit, we are definitely not only owing financial institutions as an economy, we're owing private sector because we have significant withholding tax refund that is sitting with the government. For a particular client, I'm looking at 21 billion that could be used to create 1,000 sites, tower sites, that would increase our broadband penetration and help with digitalization. That frightens investors away. That locks investment out of Nigeria. So we have a lot to do with saying we shouldn't even tax on revenue anymore, which is what our withholding taxes have amounted to. We should tax on profits. But even in looking at those profits, what is the profit that we're taxing? Here we're saying education tax is accessible profit, but accessible profit is informed by a lot of add-backs. So we definitely need to look at the base for which taxes are assessed and review those. Yeah?
Beautiful. My takeaway, tax, profits, and not revenue. I'll take note of that.
If I may just add to the conversation, another matter that you had raised earlier that we didn't speak to, which is, thank you, which is how practical is it to have the one revenue agency do the work of administering all and collecting all the revenue? I think the question did come up. And, you know, we've seen this happen before. So in Kaduna State, they passed a revenue law under Governor Nasiru El-Rufai. They blazed the path, passed the revenue law, and consolidated into their revenue agency the power to collect all government revenue. So imagine going to the lands registry to go and do something. That money you pay there is collected by the state revenue agency, not by the lands bureau. So, and across the entire ecosystem of that state. So, Kaduna was able to do it. And the impact on Kaduna's fiscals was significant. So they closed a lot of gaps, and today CBN is complaining about MDAs that retain revenue and don't remit to the federation account. If you remember some of the conversations that the finance minister was having back in the day. All those problems are eliminated because the revenue is sitting with the fiscals. So it can be done. You can empower I think they want to use NIMASA, They said they wanted to use some pilot agencies to see if it can be done. I think it's the right direction of travel. You can empower the FRS to do this. You can empower the FRS to collect duties if you want them to collect duties at the port. There's no reason for the customs authority to be the ones doing that. Let them police the borders. Let them do the work, the very good work that customs does in facilitating trade. The revenue aspect of their work can be done either by them or by FRS. I'm not saying necessarily do NCS, but the government is thinking about it. We've seen this happen in the UK, where they also consolidated Her Majesty's Customs and Revenue, and the administrative part of the customs work, the revenue part, was consolidated with the revenue service. So it can be done. Obviously, it'll have to be done carefully and sensitively. But I wanted to remark to you that we've seen it happen in Kaduna State. And Kaduna is a microcosm of Nigeria. So it can also be done at the federal level.
Thank you for that. So what I hear from you in terms of consolidation of tax laws, one, put that provision in the Constitution to bring about sanity. It is clear from the Constitution what everybody needs to collect. Secondly, sort of have a one-stop shop. Whatever you are doing, so just like remitter, you want to pay a tax, it should go into one pocket, one entity, one agency responsible for collecting those taxes. Whether you are dealing with the Land Bureau or you are dealing with customs or you are dealing with whoever, there should be essentially one person just generate a code, go there and pay. That brings some harmony. I think that's a very good takeaway on this issue, and which I think the National Assembly and the executives of the respective states should also look into. I don't know whether you have a comment to that, because I want to ask him a different question. Okay. So my next question to you, Mr. Olomola, is in relation to the Rural Investment Allowance. I heard the presentation from a series on what informed the need. I heard the presentation from a series on what informed the need to take it out. As a transaction lawyer who advises clients in the energy sector a lot, I have noticed that one key incentive why some companies invest in the rural areas, so for example, mini grid developers, is because of taking advantage of that benefit. Now, Nigeria will have signed up to a lot of international goals, what's it called? United Nations this and African Union that. One of which is the United Nations Sustainable Development Goal of building sustainable cities and communities. Do you think the removal of this will impact on investments moving into those areas?
Thank you very much, Anthony. It's another very good question. And I know that when the planners of the Finance Act mooted the idea, I know that Mesiria and I also had arguments. I work for the private sector. All my clients are in the private sector. And I am not one that likes to see incentives being removed. Nigeria is not yet at the point where businesses can be done without incentive. There was a view that the incentives were redundant and not well used. But you've just highlighted a sector where such incentives could be useful. It's been done. Do I like it? I don't like it. But I also believe that if it had been truly redundant and if nobody was claiming credit under the scheme, then we can clean up our legislation by removing redundancy. But is it truly redundant? Now, having said so, the reason I don't like allowance schemes is that it only allows you to get back a percentage of your costs. I'll give an illustration. To provide that mini grid, you would have spent, say, $100. exponentially more, but just for the purposes of illustration. When you get an allowance, say 15%, rural investment allowance, what that means is that 15% of your spend at the CIT rate of 30% is what you get back. It's a fraction, it's negligible. Nobody's going to invest based on that. It doesn't incentivize anything. But if you tell me that if you go to the rural area where I, government, have the duty to provide power and I'm not able to do it, so a private sector company is going to do it, I will refund 50% of your money. Or I will refund 75% of your money. Why not? That's incredible. By the way, that's what the Road Infrastructure Investment Tax Credit Scheme does. It returns 100% of your money. Because the road you are fixing is not your private road. You are not the only person going to be using that road. All of us are going to use that road. But government doesn't have the money to build the road. So government came up with a scheme that said, you spend your money building the road, and I will refund your money 100% through tax credits. Brilliant scheme, if you ask me. And then, because of course there's time value of money, I'll give you a small uplift, 20% or MPR rate. So, to my mind, I like to incentivize the private sector to go into places that government cannot go into. And if we're going to develop this country, and I don't even know what's not rural in Nigeria today. I mean, everywhere in Nigeria is rural. Is Lagos not rural? Because everywhere you go, I mean, the roads, you are fixing your shock absorber, I mean, the other day I was traveling and I saw a puddle of water. It was almost like a pond. You could get in there and swim if it wasn't dirty. Everywhere is rural. So why prioritize the one that's 20 kilometers away from a major road? So I don't know. I would say, let's think through the sectors in Nigeria that are challenged, and let the Fiscal Policy and Tax Reform Committee, let them come up with schemes that can actually attract private sector participation in those much needed areas. You can take the template of the Road Infrastructure Investment Tax Credit Scheme and expand that into other areas of infrastructure and give people back their money for doing what government should do and government is failing to do. Thank you.
Excellent. Excellent response. And I think I absolutely agree with you. That's a better way to see that. So replicate the road investment scheme to other sectors you consider very critical. Beautiful. Any comment on that, Esiri?
I agree with that as well. I think the only thing I probably would say is when they looked at the rural investment allowance as well, if you look at it, it talks about telephones, if there's no telephone in a certain area. And now we're all using handheld phones and not the manual analog phones that we were using anymore. So one of the reasons it was also taken out is because it's obsolete. But like Ajibula also mentioned, and I mentioned during the presentation, the RITC is actually well targeted at major investments, which would indirectly add to employment, as opposed to those mini investment allowances where you might not necessarily see the impact or feel the impact. When you look at some of the companies that have gotten the RITC, like MTN or Dangote, they're building major roads that a lot of indirect employment relies on. So you can definitely see the impact, you can feel the impact, you can measure it. But what we had with those investment allowances is the lack of measurement. And I think moving from an allowance to a credit scheme makes absolute sense because, again, you only enjoy the tax impact as opposed to getting naira for naira or dollar for dollar on your spend. Yeah?
Thank you so much. I think I will start taking questions from the attendees, both online and physical. Questions that have been asked by our online participants. Okay, the first question is to Esiri, and the person is saying, Esiri mentioned the Business Facilitation Act as having made changes to the deductions that employers are required to make. Can she throw more light on this?
All right. So the Business Facilitation Act amended specific acts that would facilitate the ease of doing business. One of them was the ITF. The Industrial Training Fund Act requires that you contribute 1% of payroll costs to the fund, and that's required of employers of labor with 25 or more people, employees. But with the Facilitation Act, that has been dropped, so you may contribute. So the question now is, do I even need to contribute? Is there any benefit? One of the provisions under the ITF Act is also that you get a refund for the contributions you make for about 50%. As you would imagine, people don't get those refunds. So you just keep contributing 1% of payroll. And there are a lot of other acts as well that demand 1% of payroll, like the ECS scheme. So it's made it not mandatory, which is good. And it's also said that for agencies, however, government agencies, they have to do the contribution. I think why I love the fact that the private sector has been toned down is what was the value, what was the benefit we were getting from the 1% contribution. We're training our staff by ourselves. We then do this contribution. We don't get the refund. And we still have, at the national level, a skill gap. So a lot of our youth are emigrating. This is Japa syndrome. But apart from that as well, is our curriculum sufficient enough to take us to the next age of growth? We haven't seen changes in our curriculum in all schools for a very, very long time. So it questions the existence of ITF. It questions the existence of providing the necessary skill set for the growth of the working class or the private sector. And for me, it's another redundant tax. So that's what the Facilitation Act did, to not only amend that act, but other acts apart from that, that were causing a downward.
Okay. The next question is to Mr. Olomola and Esiri. And the question says, they should please tell us the new approaches to taxation we should expect from federal government, their revenue drive, which we all should expect. What should be the new approach to taxation for the federal government in essentially building revenue drive?
I think we alluded to that already, one of which is expanding the tax net to go beyond just the formal sector and taxing a few compliant people. We need to go ahead and start taxing individuals who are not paying the relevant taxes, entities who are flying under the radar, some of them also presenting double books, one for investments, one for taxes. That kind of due diligence is required. Collaboration across agencies so that they share information and mine data accurately for taxation is critical. We talked about removing multiple levels of taxes, and I'm glad the government is also listening, because the SC on Revenue then announced that they were going to embark on streamlining taxes. So all in all, I'm really expecting that there will be an overhaul of all of our taxes, even going down to the Constitution. I think that there will be less knee-jerk reactions in terms of tax introductions, because what we've seen and witnessed over the years is a lot of earmark taxes. And those earmark taxes are not really consolidated to paint a more robust picture that aligns with our monetary policy as well. So I'm expecting that those gaps will be filled and that there will be more engagement again with the public. But I also think that in administration of those taxes, we might expect big changes. Just looking at SARS, examples of SARS where we have one body that's controlling taxes of even the HMRC, we can expect much in that regard. I think also that with the AFCFTA now coming upstream, we haven't really put that to use. And we think that it will be benefits in intra-regional trade across Africa to grow our GDP. Some of these policies will align with the principle of the AFCFTA, which is to allow free movement of people, free movement of goods, and also a reduction in the custom duties to the extent that, you meet certain criteria. So we can expect that. But all in all, I think we will move mostly from taxing production, which I think the essay on revenue continues to say, to taxing consumption. And we're not just going to be taxing profits unnecessarily or taxing revenues, because what are we doing? We're automatically building the debt outlook for the country where we don't pay those refunds. But we'll start to tax direct consumption. And so you don't have these inflationary effects that we continue to see year on year because of the introduction of year-mark taxes. I'm hoping that that will be the case.
Thank you, Mr. Olomola.
Thank you. Esiri has covered the field. I found myself nodding at almost everything you said. I was beginning to wonder if my head was going to fall off. But, she's covered it beautifully. But I think the questioner probably wanted us to go beyond the what sounds theoretical or analytical. So what I want to do, to compliment Esiri, is take something she said, expanding the tax net, and give an illustration. So in the Finance Act of 2023, there was an introduction of taxation on digital assets. And people have wondered, come on, what does it mean? I mean, what's all that? So, when my colleagues who prepped me for this seminar came to brief me, they came with some very interesting statistics that I had to push back. So Goki and Dolapo there, thanks for your assistance. All the credit to them. But if there's anything I say that's wrong, I take responsibility. And they came up with this, that, Nigeria, in terms of cryptocurrency and alternative investment, alternative platforms for transactions, Nigeria ranks 3 in the world, behind the USA and Russia. And in terms of persons with cryptocurrency wallets, Nigeria, 27% of Nigerian internet users hold cryptocurrency and use it for trade. Now, today, how does that reflect in our fiscals? 0. In fact, the Central Bank of Nigeria has prohibited banks from providing facilitation or platforms for crypto transactions. So if you wanted to convert your crypto into Naira today, you couldn't do it because banks have been prohibited from working with you. The Securities and Exchange Commission has tried to encourage the business. But like you and I know, taxes are neutral. We don't care where you make your money from. If you've got it, you've got to pay your tax. But if I was someone holding crypto revenue today, how do I pay my tax? Do I pay it in crypto? Does Nigeria have a crypto wallet? How do I pay? So I have to figure out a way of converting that into Naira, which CBN has prohibited. So I expect that one of the jobs that Mr. Oyedele and Mr. Adedeji will do would be to bring this in from the cold. We have essentially locked out about, the transaction volume I saw was about 150 billion US dollars worth of transactions. In crypto, we have closed our eyes to gold and we're looking for revenue. So if they can unlock that, all of a sudden, what Esiri is saying, because she's got the information, and these are the things that are going on in her mind and in the minds of all the policy planners. But, if we don't give examples like this, the public won't understand. They will just think it's theory. It's not theory. It's real life. The second one is entertainment. And we also on TV, who was it that gave the illustration about how much revenue was being unlocked? You had Burna Boy sell out Wembley. Do you have any imagination of how much revenue our entertainment artists are generating? Who here doesn't consume entertainment? We all consume entertainment. How much tax do we pay when we consume entertainment? Besides the streaming, the tax on streaming services. So you pay VAT when you pay DSTV's fees. That's about it. How many of us pay tax on YouTube? So there's so much to be unlocked. There's so many areas of new economy, digital economy, future economy that can be unlocked and contribute to the Nigerian fiscal. And that's what Esiri is talking about. So I just thought I should give those illustrations to bring her presentation to life. Thank you.
Thank you. The questions are still coming in. The next one I have here, directed to nobody, it says, is the new administration's enthusiasm for raising revenue through increased taxation not potentially counterproductive to the growth of the economy, seeing that businesses are already stretched by the unfavorable Nigerian economic development?
I thought you would take it, but it's all right. Like I said earlier, one of the costs of being in society and living in society, the reason we can all gather here today and have a seminar is because the state has guaranteed certain assumptions. You can assume that nobody is going to walk into detail solicitor and attack all of us. The state provides that enabling environment. It is the state that provides an enabling environment for trading to occur. And our own civic responsibility as part of the social contract is to contribute fiscally towards that. So to the questioner, we all have to be willing to discharge our civic responsibilities. Pay your tax. When I was growing up, I used to remember seeing my parents, sitting around the dining table towards February or March of every year, deciding which parent would claim. Then we used to have all the dependent allowance. So they were filling their tax returns, and there were 7 of us. God bless my mom. And, they had to decide amongst themselves who claims what child for dependent allowance. Well, I don't know if your children have seen you file a tax return before. So how many of us actually understand intuitively that we have a duty? The taxman cannot come and chase all of us. How many people are employed by the taxman? So we need to get to the point where, as a matter of intuition, as a natural thing, we want to pay our taxes. And I encourage the person that asked the question to please have that attitude of wanting to pay no more than is his duty, but at the same time, not paying less than is his duty. And there are lawyers, accountants, tax practitioners all around to help us to make sure that you're not paying more than you should pay. Because, look, if I was a taxman and you wanted to pay me more than you should pay, I'll probably collect, right? Because it adds to my budget. But your tax consultant can tell you, Oga, you can claim that allowance. You can claim that incentive. You can take that deduction. So talk to your tax advisor. Talk to your lawyer to understand what your rights are. Talk to your accountant. And then pay the right tax. No more, no less. And then you have nothing to worry about. Thank you.
I don't think that we see much of that anymore, or much of that here in this country. We probably see maybe a bit. The thing is, I think there's a trust deficit. There's a huge trust deficit between citizenry and government. And I think that there needs to be an ecosystem. You talked a lot about, everybody going to a tax advisor, a lawyer. How many people can afford that? I'm talking about the ordinary man. And I'm talking about the ordinary man who has a micro or a small business. People just say, I don't want the taxman to come, because there's a tax deficit that once the taxman comes, they're going to be looking for what is not there. And they don't have the bandwidth to be able to help themselves. Not everybody can afford a PwC or a KPMG or a Mr. AAA and Partners. So we need, there should be this whole thing is from government down. How do we re-educate ourselves? We can't get to a place where we are telling everybody, pay your tax. People they feel disenfranchised. They feel government has done nothing for them. So why should they pay tax? Some people are even thinking, I haven't even eaten. My children haven't even gone to school. How do I pay tax? I only pay tax because I'm forced. In Lagos State, they incentivize by saying, okay, go and register for tax for your children to go to government schools. It's some sort of incentive. But how many of these people can actually afford that tax? So and maybe this is a comment, maybe this is a question, maybe it needs a response in some way, but I think we need to be thinking about this broadly. We can't come to a place when people are going to just say, I will pay my tax just because someone is saying it's good to pay your tax. They have to be willing. They have to see the reason why. Thank you.
Well, I'm glad that the discussions here have energized the managing partner to get involved. And and you're exactly right, Dolapo. I recall a trip I had to South Africa some years back, and we were lodged at a certain hotel. And in the morning of the next day, after our arrival, I noticed very long queues in front of the hotel. I mean, there were individuals lined up as far as the eye could see. So I asked the gentleman at the door what was going on. I thought they were queuing to collect money from some charity or something. And he told me that it's March 30th, and that was tax filing day in South Africa. And people were lining up to pay their tax. I mean, you can imagine how I felt. I've never seen anyone line up to pay tax in Nigeria. So, how do we get to the point that the managing partner was describing when it becomes natural for us? I think we're fortunate in Nigeria that the current president used to rule Lagos State as governor. And during their reign, they introduced, very innovative approaches towards tax administration. I alluded to some of it earlier. If some of us might recall, we used to see Pastor Adeboye come on TV talking about tax and how he has paid his tax. We read reports that Chief Emeka Ayaoku went to the tax office for a self-assessment, and the tax office assessed him. He gave them his information. He paid his tax and moved out. And he said it took him less than 30 minutes. And then we had more and more and more examples of notable Nigerians who were discharging their civic duty. I haven't seen those adverts in a while from Lagos State, but in the days when Governor Tinubu was governor, we used to see a lot of that. And Mr. Fowler was chairman at the Lagos State Revenue Service. I'm not quite sure which of them had the idea, but it was something that I thought was salutary. We need to do something. Take it to the schools, publicize it on tax filing day. This is what happened in Lagos State. This is what happened in Ekiti State. This is what happened in Zamfara State. How Nigerians are now competing with each other to discharge their duty to the state. Now, after you have discharged your duty to the state, if you see your senator building one monstrosity beside your house and doing a Owambe party for 3 days in a row, and you are thinking, is it my money that this man is spending anyhow? Are you going to attend that party and be smiling at him? You're going to say to him, oh boy, this money I paid there, it cost me a lot to come and account for my money. But today, Nigerians don't feel connected to the government fiscal. So when people even steal our money, it's not my money anyway, good luck to him. Let us pay our tax. When we then pay our tax, we can hold people responsible. And when we see people living in opulence, we can say, oh boy, before you went to Senate, I know what you were like now. How much money are you even getting there? And we can have very hard conversations. I hope I've responded properly to the comment the managing partner asked. But that is the way. We've got to embed the culture. Let's take it back to our schools. Let's teach civic studies to our pupils. Let's show examples to our children. For those of us that are parents here, show your children where you are preparing your tax return. Let them see what it is like. Tell them what it is that you are doing. So that they too know in their mind that when they grow up, they too will pay tax. Thank you.
I'm still seeing questions around this conversation, but I think I'll have to skip them to allow people in the room to ask questions.
Yeah, my name is Rashid. My question will go to Mr. Olomola. Mine is more like a compliance to tax remittances and some other thing like that. Maybe let me paint this. It's like if I have a client that I invoice probably in USD, and at the point of remittance, they actually remit in USD, and they are withholding tax remittance was done in Naira. What will you advise? Will you advise that we do remittances of our VAT in Naira as well, since they have done their own remittance in Naira for an invoice that was paid in USD? That is one. And in what instance can I decide to do my remittances in local currency for invoices that were paid for in a foreign currency? I think that is one of the questions. And also, on the issue of that withholding tax, on the issue of that withholding tax for a client that actually pays for an invoice in USD or in foreign currency and also does their own withholding tax remittance in Naira. If that organization is probably, let me assume, if I have like maybe a business name where we have different tax jurisdiction, like the withholding tax goes to the state government, while the VAT goes to the federal government. To what extent do those two tax jurisdictions share information in practice? Do they really share information that much to that extent? I think that's the question.
Thank you very much. I didn't know I would have to answer such difficult questions. Thank you very much, Anthony, for setting me up. Unfortunately, there's no complete answer to the first question you asked. The second one was probably easier. The law does say that you should pay taxes in the currency of transaction. Problem in your case is that you raised a US dollar invoice, which your client paid to you in USD. And so ordinarily your taxes should be paid in USD, right? But then your client has chosen to deduct the withholding tax on you in USD, but paid Naira to the tax authorities. That's not your problem. As far as you are concerned, you have a credit note. Then you should have charged them VAT, which they remitted to you on top of your invoice, which you are required to pay to the FRS. And FRS would expect that in USD as well, being the currency of payment. And quite frankly, that's the way it will have to work. You'll have to explain to the tax authority that the withholding tax was paid in Naira at a particular rate. The only question will be whether the rate your client used was a rate FRS would agree to, but that's not really your problem. The law requires them to deduct. They have deducted. The law requires them to remit to the FRS in your name, and they have done so. So as far as you are concerned, there has been full compliance with the law. But in the aftermath of COVID-19, it became an also of exchange scarcity in Nigeria. It became extremely difficult for taxpayers to source FX with which to remedy their tax obligations. And the tax authority were kind enough to issue guidelines or circulars to the public saying, look, we give you a dispensation for this period. If you want to pay it in Naira because you can't source dollars, that's fine. And I think we're in exactly that same situation now because there's a lot of scarcity. There's not sufficient supply of FX in the market. So I guess in today's world, if you have a dollar tax to pay as a Nigerian and you can't raise FX from the CBN with which to pay to the FRS, they will be happy to receive Naira from you. Our question will be what exchange rates to apply. And I will suggest you use the exchange rate on the date of payment, especially if it is higher than the exchange rate on the date of transaction. Now, that's interesting because I had a discussion with the managing partner earlier before the presentation started. And we had this debate over which governing date. Should it be on the date of the transaction, which is when you provided the advice, or the date of the invoice, which is when the liability arose, or the date of payment, which is when they paid you? Or is it when you are paying FRS, which is the date of settlement of that tax liability? Well, you're all lawyers here. You probably know this better than I do. You can advise us on which exchange rate should be the applicable rate. But I will say to you, so long as you have used the exchange rate that results in the highest tax, the FRS will not quarrel too much with you. The second question was as to tax equity between the different units. So if tax is payable to Lagos State government because you're a business name and your client has remitted that to the FRS instead. And that happens a lot more than you would imagine. And at that level, they have the Joint Tax Board, which serves as a harmonization body. And the data is available. So if you go to Lagos State and try to take the tax credit, typically what would happen is that they will take note of your matter. They won't close your tax file, but they will try and get FRS to either refund that money or offset it against monies that's due to FRS from Lagos State Inland Revenue, because there will also be some people that would have paid taxes due to federal to Lagos State. In some instances, maybe the taxes due to Lagos State, they would have paid to Rivers State or other states. So there's harmonization at the JTB level to make sure that the taxpayer doesn't have to suffer the tax more harshly than he ought. It doesn't always work, like everything in life. Sometimes you have to work it, but there must be relief available to you. So talk to your tax consultants and let them try to leverage the JTB in resolving that matter. Thank you.
Thank you so much, everybody, for your participation. Our panelists need to run now. And please, a big round of applause to them on doing justice to this conversation. Thank you so much, Mr. Olomola. Thank you, Esiri. We look forward to having you again and to having conversations around this, as well as the ones that are also more beneficial to you as a person. Thank you. And I'll call upon Omalobake.
Good afternoon, ladies and gentlemen. It has been such an honor witnessing today's event alongside beautiful faces and amazing minds in this room. I'm sure you would all agree with me that today's session has been power-packed, from the presentation excellently delivered by Madam Esiri to the thought-provoking panel session. On behalf of the Detailed Commercial Solicitors team, I'd like to say a very big thank you to Madam Esiri Agbeyi and Mr. Ajibola Olomola for gracing our invitation and making today's event a success. I would also like to appreciate every single panelist that has joined us physically or virtually today, and we do hope that it has been a value for your time. Thank you very much once again, and enjoy the networking bit of today's event.